In today's video, we're going to be focusing on a crucial update here on the Pi Cycle Top Indicator, talking about the historical tendencies we see in 2019, 2015, but even more importantly, the halving year and how does that influence price when it comes to the Pi Cycle Top moving averages. The halving years have their own tendencies compared to the pre-halving years, so we'll be talking about that in a lot more detail. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right in. So the halving year 2020, for instance, this is a very important year for Bitcoin because we tend to see upside deviation, downside deviation, and once that final deviation occurs, we see support holding of the orange 111-day moving average. The same thing was the case in 2016, so that's also another halving year, and you can see here holding of support of the Pi Cycle Top moving average all the way to new all-time highs. However, in the pre-halving year, you can see lots of oscillation around this moving average, so very different tendencies also happening in 2019, oscillation around this moving average. So now that we're transitioning slowly outside of the pre-halving year, it's important to note that we're going to be exiting this oscillation type of behavior that we've been seeing all of this year in line with historical tendencies in the pre-halving year. We're going to be transitioning into the halving year, and so things are going to probably start looking more similar to successful retests of the Pi Cycle moving average, which is why it's important to understand that we maybe have 1 month left for a potential downside deviation below the Pi Cycle moving average. Maybe if we do get some sort of retest, then a drop into 30k could occur. That's currently the price point that the Pi Cycle moving average is representing right now. Any sort of dip into the moving average could take place. If one does occur this year, then that would be the next level to watch out for, with scope for downside deviation and downside volatility below this orange moving average. But as we go into the halving year, that's going to become less likely. That sort of downside deviation and oscillation in general, we'll probably see retesting of this level. And if you look at this moving average, generally it's ascending in the same way that this green moving average is also ascending because price is ascending, so the moving averages are going to be reacting to that. And this green moving average, on the other hand, that's around 53k, and if we look to the past, for instance, to history, in 2019, pre-halving year, we rejected from here and experienced a strong retrace. That's probably not going to occur since we're going into the halving year. So you can see here, for instance, in the halving year, rejection, very small rejection, but then break to new all-time highs. In the pre-halving year, for instance, in 2015, we didn't actually revisit this moving average, but then in the halving year we did, and a kind of rejection which was deeper than this small rejection here in 2020, also a halving year. There was a stronger rejection here. So generally speaking, if we're going to be focusing on this green moving average, then there's scope for a potential rejection from that region in the halving year. And that would be a rejection that could be 20%, 30%, whatever the case may be. But we'll probably get only one rejection from there because the next time we get there, we'll probably break beyond it quite comfortably. And the thing to note about the Pi Cycle moving averages and generally their crossovers, we're going to be talking about now, when could we potentially predict the Pi Cycle crossover? Because these crossovers of the moving averages, when the orange overlaps with the green one, we tend to see bull market peaks, and this is a very accurate indicator for preceding those bull market peaks. You can see here, right over here, that was quite accurate in the sense of marking out the local top in the mid-cycle, but we probably won't be seeing any more mid-cycles going forward. So this is predominantly a bull market top indicator. And if we focus on when this Pi Cycle crossover could occur, well, first of all, we need to note that we're still ways away. 30k is where this moving average is representing price, and 53k is where this moving average is representing price. And of course, a crossover, we have to have these moving averages get much more closer to each other. So they have to narrow over time. This will occur as price goes towards the upside in the bull market. We'll see this narrowing occur, but we're still a ways away from a bull market peak. And if we were to just extrapolate these two moving averages, when could we see a potential bull market peak? And if you just do this, for instance, you'll see that these moving averages could almost go on forever. And the point here that I'm trying to make is that these are dynamic moving averages. These are dynamic moving averages, and so they're adjusting to price with every price move. And as price continues towards the upside in the bull market, we'll see both of these moving averages lift up. And this moving average, since it's a 111-day moving average, it's taking into account less days in the moving average compared to this moving average, which is like 350 days times 2. So this moving average is less sensitive to price than this one, and as a result, if price continues towards the upside, this is going to be the faster moving average that's going to be adjusting more than this slower, less sensitive moving average. And so this is going to be chasing the green moving average throughout the next 2 years. So as a result, right now at this point in time, if we were to extrapolate the moving averages, then we can't come up with a bull market peak date because they're just going in parallel for ages and ages. But once we see more inflection on this moving average as price goes up, we're going to have an intersection at some point of these moving averages in the future. So as time goes on and as price increases, we'll be able to conduct this analysis and actually come up with a relative estimation of when we'll be able to see a potential bull market peak for Bitcoin in this cycle. But then again, we always have to take into account that these moving averages will be adjusting to price, but with time, we'll be seeing a narrowing, as you can see, for instance, here, narrowing. Because in the pre-halving year, you can see that these two moving averages are miles apart from each other, just like they are right now in this cycle, and just like they were in the pre-halving year in 2015 as well. But then you see that these moving averages, well, there's more compression here, and they just narrow and get closer to each other, and then finally they cross over in a climax event where that bull market peak occurs within 3 to 5 days, if I'm not mistaken. That's how accurate this bull market top indicator really is. But the last thing that I'd mention here is that this is a bull market top indicator, but it's also, as we've spoken about in this video, it's also a trend indicator where in a pre-halving year we see oscillation around this moving average, but in the halving year we then retest this level as a support, and it's been the case across history. So this can be a trend indicator in the same way that it's predominantly a topping out indicator, but this indicator can offer a lot of insight into how to understand price going forward, with this green moving average potentially acting as a point of rejection in the halving year on the first time of asking, this moving average potentially being that retesting opportunity in the halving year. That's going to be the level that we're going to be hammering out for support, and so that's going to be the reaccumulation area in the halving year as we continue in the uptrend. And if we do, by some sort of event, some catalyst forms and causes a downside deviation below this moving average, then that's even a better ROI, outsized ROI opportunity for investors for the long run. So the indicator here can give a lot of insight, especially the crossover. The crossover is nowhere near to happening, but it will happen in the future, but probably still 2 years away. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy data science videos like this going forward, and check out the top right hand corner video for more. Thanks so much for watching, and I'll speak to you in the next one.